Hello, this is Imi from iTradeAIMS.com, my blog, AIMS Stress-Free Trading. I'm here with another London report. Now today, as you can see on this chart, this is the German 30, and if you don't know, and if it's your first video, welcome to the channel. Well, we trade the DAX 30 at the London Open, which is 8 o'clock the UK time and 10 o'clock on my chart. So here I have marked the London Open. So this is where market opened, and it went up and then down and then up again, and then it was ready for a setup one. So I could see, this is what I saw. Where's my arrow? So I see this strong move down, and this is the Frankfurt Open. So I can see that price has traveled down from that point, and it has given me a wave 3. But notice that it also has a divergence here. So inside the wave 3 we have a 3, 4, 5 already formulated, and so it goes up, bounces against the purple. Notice how it reacts to these levels. Now the box was big, but it was London Open, so I use the what I call the low bot strategy. So whenever it forms a box and it tries to break it, especially in the direction of the trend, I will take it. To minimize losses, what I'll do is that as soon as this candle closes, my stop loss will be above there. And then when price moved, I saw that it reacted to this level, could not clear it, and created a very strong bullish diversion candle, which we call the fruit candle, and that allowed me to actually just get out, break even next. What followed this was a very strong move afterwards, which I will show in my next slide. Right, so price then from that point was here. That's my previous entry, and I exited here. Now here I was a little bit interested to go long here, but obviously it's not a setup one for me, but I'm still in the London Open session in that mode, thinking okay, I can go long. But then I saw that the box was very big, right? So big box means one thing, that there will be less energy left around those levels, around these levels, for price to penetrate it and go straight up. It will pull back, and that is because what we believe is that between an upper AIMS level and a lower AIMS level, so this was the let me just delete some of them. So this is the fresh, at this point this was the fresh box low, and this was the fresh box high. So between the box high and a box low, there is an Elliott wave of a certain degree, right? So if that's one wave, then if this goes up, something's going on. Let's see. So this turned into a 1-2 some sort, and then it created this candle. It rejected it, and I thought, okay, I was right, good, I'm not in this up there. But then it was followed by this candle, which is, I like, this is from all the candle patterns, I think one of my favorite one is the engulfing candle. Now I don't call this an engulfing candle from the Japanese candlestick point of view, because that's slightly different definition. I rather call it the outside bar. So this is the outside bar or the outside candle. If you combine the two terminologies together, you can see that it's the low of this is covering that, and it's in the direction of the trend. So it's telling you something. It is a candle that tells you about the current price and its direction. So these are directional indication candles. They give you something. It's very powerful. I love these candles. So I could go long at the close of this candle here and have my stop loss there if I wanted, but I didn't. I was still careful, allowed it to go up. And now there is a slight lie in there, I just noticed, because the reality is that using the fruit method, I was long from here. but I don't want to talk about that because fruit method is a different thing. Anyway, so that's the peak of wave 3 up there, terminating with fruit candle again. If you don't know fruit candle, it is the bearish divergent candle where the tail goes higher than the previous high, but it closes below that, and it creates this. And these are very powerful candles, reversal candles. Again, it's a candle that has directional bias. It gives you indication, some information, and obviously price followed. And at that point in the chat room I said something like, it's nice to find these divergent candles, fruit candles, where there's a fake out, as you can see here. Okay, let's come back to this. So if you look at this candle, not that, see this box here. Now this here, and what was happening on the M5 chart, I gathered that this was a strong rejection of sales, so buyers kicked in around here. So that was a strong, this is what I call a fake out fruit candle. So you have price kind of going in a trend and then going through that sideways phase, but when at the open it's trying to break out, it actually fakes out because it doesn't, and then creates this really excellent spot to actually go long there, have your stop loss here. Then you would add on somewhere in the middle of this box and add on here. So all these 3 entries will have the same kind of distance equidistance, which we call the webbing technique. All the add-ons should have equal distance between them. That gives you a very good average price. And then when this formation happens, which is a sell fruit, what you do is you'll get out of these entries there. Anyway, so that's that done. Now I'm monitoring price. It comes down and goes back up, creates a seed signal. I'm interested. I was talking to Jazz at that time and I'm thinking around here, if this seed kind of ended here, if it was say this big, I would have been very interested. It would have become a momentum seed, or what we call the Waltz pattern here. So I would have been interested to actually go long here, and at that time there would be no box here, by the way, because this box high was confirmed at the end of this candle. All right, now, so what you see here is a PC entry. This is not an official entry method introduced in the members area so far, but this is probably the first time I'm introducing. I've been watching it and trading this for a while, but these are advanced entries, so usually people are not in the advanced stages, so I really don't talk about it. Anyway, so this is the PC pattern. The PC pattern, I have other videos about this. If you search, you will find out what is a PC pattern. So the PC pattern essentially is an ABC. So this is wave A down, B up, and a C down. And what happens is that C wave breaks the sequence of this stepping up sequence. So if this is an uptrend, you have a higher high and a higher high. So this is your higher low, and that's your other higher low. What happens is that C wave pokes through the higher low in this case. And now I've noticed that you probably don't even see my chart for all these arrows, right? Let me take them away. And so it pokes, but then it does not resume in that direction. Instead, it turns around and resumes the trend. So what it was is that I thought, okay, if this is C and if this is going to be a B trap, then, you know, because now there's another pattern. So what happens is that sometimes you have this pattern comes here, and then when you have a high like that and a high like this, price would usually kind of do fake out like this one over here, and then it would actually turn around. Then in that case, this formation turns into 1-2. So within 1-2 you have ABC, and so we call this as a B trap. Sometimes it would trap the buyers in there and then drop from there, and I think that. Okay, moving on to the next formation. Now what you see here is a beautiful setup point, but what's more important than this is how it was created and how we kind of captured it and talked about it in the chat room. That you will not know right now, because for you to understand that, you'll have to be part of that. It's very exciting and interesting, you know, following these charts. So from the previous discussion, we were here, this is what happened. So this trade was triggered. I will show you next. Around here, the add-on was triggered, and I was talking about, okay, this is a B trap, and because we had a trade here and one here, when this candle happened, I said, all right, so we have B trap happening, and that's why I will put my stop loss below this. 2 candles later, we got a tight box. Then obviously my stop loss was below this. Then I put an add-on pending order up there, in case if it was to go, it was going to go really strong. When this candle happened, I was out. And this was time to say, okay, let's have a little break and have some tea time. And that is exactly what we did. Came back around this time. First thing, one of the members in the chat room, you might have heard her name a lot, Jazz, asked about this candle here, if I would have gone short here. Obviously, with the benefit of hindsight, of course I would have gone short here, but I'm not sure, because around this time this box would not have existed, so I don't know if I would have gone short there. But I would have if I was actively monitoring this, because I monitored this, and because I knew what was happening here, and because I knew that the overall trend was down, right? If I knew this, then it would be easy for me. But anyway, that's not the point. So what was more important was that I saw this happening. That is very important. Why? Because as you can see, this is our London Open. This was the initial fake out. And when price came back the next time, can you see this? Tries to break it, comes back up, but now it had boxed around that region. So first it boxes around here, then it gives me this beautiful A and B and C pattern. This is actually enough for me to consider going short anywhere here. But then we had a very nice tight box around here. So first entry was this, and this is the main story of this London report. This is beautiful. So this happens. I was asked in the chat room whether I would go short here. I said yes, absolutely, I'm short. And then I started talking about it, and I will talk about it now as well, which is, so because there was no red dot at the moment, but you see the pattern, you see the wave 3, you see wave 4. So what you do is that what if it breaks straight away and doesn't give you a chance? That should be all right in normal cases, but you don't want to miss those, right? You want to catch them. So what I did is to if you risk 1% per trade, what you do is you half that and you put stop loss up there. Why? Because there's a risk of B trap here. Again, that B trap is something like this. See this what happened here, B trap. So that could happen here as well. And I thought if it's a B trap, it might go up, so why risk all of it? So if that's the case, say, okay, if it's a B trap, I will risk half, so here I would get out. But if it's not a B trap, as we can see, it came all the way up to the stop loss, but you have to hold on to yourself, right? Hold on to the trade, because the idea was there. It wasn't invalidated. You'll be proven wrong only when price goes above that. So I kept to that. And then I thought, okay, so if it survives there, then that means I was correct that this was a 1-2 or a B trap, not a B trap, but a 1-2 going into a wave 5. I will then add my rest of the position here, and that is what we did. You can see 2 entries. Stop loss is still there. You don't need to, change, touch that stop loss for now, because you just want the stop loss to be there just in case there's a calamity or something like that. It is not a stop loss for taking profit. It's a stop loss for a disaster kind of stop loss. Obviously, if market went this way and then came back and closed here, then I would have an option of saying, okay, now I'm fully invested. Do I want to get out here and avoid a full 1% loss, or do I still believe that, you know, the market is going that way? So that is the next phase, and now we're going to the next slide, which is, I think, even more interesting. Oh yes, so we followed this through, and this was exciting because so now the candle has you know, broken the level very strong, giving you strong indication that, wow, this is like something fantastic happening. And so before we saw this bit, we saw this happening, and some people will be getting excited, taking their entries there. This is not that entry, the third one. But market suddenly reacts to that price level again. You see these box levels. My yesterday's video is about how to draw these rectangles on your chart, because these are amazing points created by the AIMS box. The best support resistance levels are these ones, because they help you with formulating your theories and, you know, taking trades. So do check it out. So market reacts to this, comes back up. Now this is the crucial bit. This is a very crucial bit around here. I'm not referring to the, you know, the pin bar now, or a failed reaction. But as the market starts to go up there, weak hands, you know, people with lower discipline would start getting out here. And if they had very, very huge positions invested here, then they would be getting out there. Not for me. My stop loss was still up there, because I knew that the theory that a 3 and a 4 has happened and 5 is on the horizon is still intact. So I stayed in. It could have happened in many occasions that I would have got out. You know, it happens sometimes. But in this case, especially after when, you know, price touches this green line and then closes outside the box, can you see here? That's it. I'm more interested now. 3 minutes later, you have a box high. I could have brought my stop loss to, let me delete this one, to this level if I wanted. Why not? But by that time I knew now it's going to happen. And I even said jokingly that 100 points drop is coming, which means, you know, when you look at those charts for a while, like I have been, you would develop this feeling for the market. And around here, I thought it was just about to explode now. I really did want to add on one more time here. But then I was fully invested, and I said, forget it. That's it. This should be enough. I think, yeah, this is what it is. Oh, a guaranteed 100 points drop is coming. Before that, I was thinking it won't stop me out. Okay, Jazz was asking, would you add on this new box now? I think she was talking about this box. And I added on just around at the close of this candle, because I wanted my third entry to be slightly closer to those entries, so that I have a better average price. So this add-on actually is based on this box low. So it could have been below the box, it could have been here. All right. Depending on, and I said sure, why not, depending on how much have I risked already and how much am I in profit at that time. So I wasn't worried about being stopped out. My stop loss is above the box. We are still in wave 4 sideways, so I'm not moving it. I added on earlier, so there we go. Then this happens. Now it didn't really break straight away, right? It didn't. It's still reacting to those levels, but after that, and as you can see, my stop loss is still up there. It's not because it should be there. It's just because I'm just looking at the market, and I know that if this just bounces and goes up there, I would have got out straight away out of all of these 3 entries. But just the way the market was moving, it was quite clear it wasn't going to do that. It was going to go down. So my stop loss is still up there, but ideally it should have been here, or my stop loss should be at this. So if you were to make a decision of moving your stop loss right around here, at this point, at this given moment, I will put my stop loss at this entry level, or maybe even slightly lower there, making it a technical break-even trade, like around here. Yes. What's next? Let's go. Well, so a minute later it dropped, and that's it. Now we are in the profit zone. So at the end of this candle, what I would do is that I would hit candle trail on the ATM. Thank you, Steve. A beautiful trade management software we have available at 4-exe.com. So when that happens and you hit the trail button, that's it. You don't have to do anything. Just watch and, you know, box of popcorn, enjoy yourself, sit back and relax. A few minutes later, this is what happens. T candle has been clicked. It's moving all three stop losses and trailing the candles. And last slide. This is the beauty of it. So it's here. We have a perfect cherry. So this is the hunt formation. New peak, pullback, cherry signal, dark tones, bang, it goes. And it goes into target zone 1. You can see this is target zone 1. I have drawn it using this and this. So I have 3 entries into it. Hits target zone 1, and a few minutes later, I think it was around here, we were out. Yep, that's it. This is the MT4 chart. That's where we entered. Let me just refresh the chart. So this is how the chart was. I'm going to drag and drop from history. That's 1. Well, that's the second entry. That's the first entry. Drag and drop. That's the third entry. So that was the first entry around here. Stop loss was there. And the second entry, beautiful. So even if you took one, either this one or this one, or at the low of this box, fine, you're good. And trail was activated. Let me draw that target zone 1 for you again as well. Here we go. From start to this, from there to there. Perfect target zone 1 over here. Let me bring that chart here. Here we go. See this target zone 1 gets activated. Perfect. And that's it. Thank you for watching. Please hit the subscribe button and hit the like button if you like the video, of course. And there you go. See you later.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you